Meanwhile, retailers continue to brace themselves for the impact of the ongoing trade war. But this retail analyst thinks major retailers like Walmart, Target, Costco, Amazon, and Best Buy are actually positioned to weather that new barrage of tariffs. Moody's retail analyst Charlie O'Shea joins us now. Charlie, you saw this China news coming in this morning. Clearly, the trade war is starting to get out of hand. It's escalating. Aren't retailers, shouldn't they be more worried than they are right now?
It depends on what your definition of worried is. Mm-hmm. If you're going to buy a TV, you're going to go to Best Buy. Mm-hmm. Or you're going to go on the Amazon side. You're going to go to Walmart, you're going to go to Target.
Walmart Circuit City.
Yeah, exactly. You're going to go to Best Buy. Best Buy will be able to sell you a TV regardless of what the tariff situation is. Mm-hmm. They could sell you something sourced in some country other than China. With Best Buy has broad sourcing. Walmart's got the same thing. Costco has the same thing. Amazon, Target. They've all diversified their supply chains immensely over the last 10, 15 years, easily, away from any concentrations. So if you need something, you'll find it there. The question becomes, if you're wedded to a tariffed brand, maybe you walk out the door. But if you really want something, you're going to be able to find it with one of these guys.
Even though a lot of these retailers have moved their supply chains out of China, they're still, in many respects, tethered to China. Aren't their costs going to go up, and aren't the prices on consumers for the holiday season set to go through the roof?
I don't know about through the roof. I think, again, there's going to be balance throughout the product line. So Chinese goods, yeah, if these tariffs stick, and that's an open question. Mm-hmm. You know, there's been a lot of rhetoric going on, a lot of back and forth.
Got to watch the president's Twitter feed, right?
You got to pay attention. Yep. But our view for at least the larger retailers is don't overreact. You're probably very well positioned right now. You're better positioned than anybody else.
Who's the best
certainly
positioned?
I would have to say from a sourcing perspective, it's Walmart. Broadest supply chain. We used to consider supply chain, we still do, consider a very important factor for covering and rating retailers. And we've felt for years that Walmart had the best supply chain in retail. That goes back to sourcing, it goes to distribution, store stocking, et cetera. But I'll use a different example. I cover the auto retailers. And there's a lot of tariff worries about them as well. If you walk onto a lot, you will find a car that's reasonably priced, that doesn't have tariff impact, no matter what the tariffs are, where they made, all that kind of stuff. Or you'll buy a certified used car, you'll move down the food chain. If the consumer really wants something, they're going to buy it. And on the pricing side, the guys that you mentioned, those 5 retailers, all have tremendous power over their vendors.
Now, I know for you have your eyes or your ears close to the ground on the debt markets.
Yes.
I'm looking at a JCPenney, distressed company. I see tariffs coming. I think that could potentially put the company to the ground.
A general statement, not specific to Penny, but anybody at that end of the rating scale has got issues beyond tariffs.
Can they survive the trade war, though?
Can Penny survive the trade war?
And even a lot of the other distressed retailers.
It depends. It really does. Again, it goes back to if you've got a broadest product array, you'll be able to sell a shopper something. I mean, if they come into your store, you got to be able to sell them. And if you've done your job on supply chain, and even a lot of the smaller guys that are at risk from a credit perspective have diversified their sourcing. So they should be able to sell you something. The problem that those retailers have is just the barbell with the guys at the top squeezing them on all fronts. And this is yet another example of, I used a term the other day where if you're a retail CEO of a poorly or lower rated retailer,
there's a lot of them,
and you get tariffs, you're walking out on the front porch looking for the locusts, because what else can happen next to you?
UBS was out with a report, I believe 2 months ago. They said full-on trade war, you could see 12,000 store closures in the U.S. Do you agree with that?
I think the store closure stats are misleading. We've been overstored for years. We put a piece out in November 2012 that talked about, I used 11 retailers, and they had built 12,000 physical locations or leased over the prior 5 years. We haven't even cycled through those yet with those guys. So as we've shifted online, retailers have used different strategies. We saw what Target's been doing, using the stores as mini fulfillment centers. That's a strategy that's working for Target. You have to find a way to unlock the value. That said, there's still a lot of stores out there that probably don't need to be there. And I would urge investors to drill down and say, who's closing the stores? Don't get sucked into the headline. Who's closing the stores? And did they really need to be there in the first place? You look at Payless, for instance. Yeah. Did they need that many locations? I've been there
since I was 15.
Did Payless need, a few thousand stores in the U.S.? Probably not.